Hello, everyone. Welcome to the Tom and Tony podcast. How are you, Tom? How are you doing?
Well, doing fantastic. It's been a while, so it's good to see you, and things are good.
I'm glad. I'm sorry it's been a while. I've been traveling a lot, family, business, and finally I have a little, time to relax and trade and enjoy my screen, my computer screen. So, tell me, what did you do over Christmas or over the holidays?
Yeah, it's just been busy. Family time has been fun. So last year like I said, we did a big house remodel. That was a pain, so it was good to
Yep.
get that done, and just kind of hanging out and spending time with the family over the holidays. Haven't really gone anywhere exciting. Got a bunch of stuff coming up this year, so we're going to be traveling. I think like every month we're going somewhere, but
Wow.
it's all good stuff, and I'm looking forward to some doggone heat because it's been cold here in Cleveland for weeks. I don't know where this global warming thing is, but I kind of need it right now because this is just cold and frigid out there, just continuing this week after week of Arctic weather. So,
Believe it or not, California has been very cold also. And the last 2 years we had incredible amount of rain, and this year we've had the driest season since 1850. And I think that was one of the reasons for the fires because
sure,
with
yeah,
the rain, all the plants grow, and then you get a year with no rain, and it's all just like it's like energy, stored up energy that can just light a fire in a second.
yeah. It's too bad all that stuff that happened with the fires out there. I don't know. It's not as much in the news now, so I don't know if it's kind of died down a bit, but yeah, terrible stuff out there, and super dry conditions does not help things.
It does not help. I had a fire like a mile and a half from my house 10 days ago,
Oh
and
wow.
thank goodness the fire department put it out. So it's it's scary down here in California. So we
So
need a
I
little.
don't know if this is right or not, but so I was watching, because everything
Yeah,
you see on the internet's true.
yeah.
In fact, I saw something this morning about an asteroid hitting the Earth in 2032. So I'd buy your long puts soon. But anyway, there's
Well,
a
if that happens, we don't have to worry about our
I guess
positions
it's
anymore.
small enough that's just going to wipe out a city. So as long as it's not your city, I
Oh,
guess you're all right. But there was a guy in California selling a product that if you have a swimming pool, it actually uses the water from your pool, which is thousands and thousands of gallons of
right,
water.
right.
It uses your pool as a fire hose to help protect your house. So you buy this gadget, you dump it in your pool, and essentially it will use the water that's in your pool, and you can refill it as your pool refills or something too. But
Mm,
it'll use that water instead of trying to use your little hose or something like
yep,
that, and
yep.
you can protect your house. Well, it was an interesting looking gadget. I'm sure that maybe now he'll get some enthusiasm around it or something. But it seemed interesting.
I
Anyway,
don't have a pool, but I have a spa, a large spa. So I'm gonna look into that.
there you go.
Hey, that's not a bad idea. I'm gonna have to. Yeah, I'm worried about it. So anything could change in any moment. So
Certainly.
it's a crazy world out there right now. Now, tell me about your trading in 2024, Mr. Tom King.
Well, it was an exciting year, that's for sure. Started off. Started off like well, I don't want to use the house on fire thing, but started off, gangbusters for the year.
Yep.
We had a great year going uh, on the trading accounts. And then Volmageddon happened in August. We had a
Yep.
pretty good drawdown in August, and now we're back to where we were at the beginning of last year in that account. So we've made some pretty good recovery there. I haven't put any more money into the trading account. The
Wow.
investing accounts, though, are at all-time highs. Finished the
Wow.
year at all-time highs. In the investing accounts, keeps cranking up here uh, pretty well. So we've done very, very well, with the exception of really that 1 day, 2 day drawdown that we took. That was a pretty good hit.
But
Fixed a
I'm
lot of
I'm
things, and
very
then really took about a month or two to really get settled on how I wanted to tweak some things, made some tweaks, but then just been running since then. So we're ended the year pretty much flat. So my investing, my trading account was down, I think maybe 10 grand or something. It started the year at, I think, 395 or something, ended the year at like 370 something. So pretty much just a flat year.
Wow.
Considering, but I had a really good year going, gave a
Yep.
chunk back, started to recap it. Now we're above that mark where we started last year. So we're back in action, I think.
That's incredible. That
Not back to all-time highs yet, though.
No. But I mean, what was the lowest point on that account after Volmageddon?
The lowest point in that account, I wrote some of these things down today. So
yeah,
the lowest point in that account was on that August 5th day.
Yep, I remember.
I was at 278,847. So in the trading account, in that trading account, we were at 278,847 at the end of that day.
Wow,
so that was the low point of the sell-off. And right now I'm at 391, 392, 392. Keep moving. So 391, 392, something like that. So
you had a 30+% return from September to December. That's incredible.
Yeah, so made about 120 grand since that August day back into the account. So we're back to kind of where we started last year, and
that's incredible. That's amazing.
It is what it is. It's great learning. I feel really good about where we're going. We had a really good January. Trading account, investing accounts, all up really, really well. Had like a 7% January, so it was a good month. And I'm excited where we are.
Wow, that's incredible. I have to commend you, because normally a lot of people would just throw in the towel after a crazy event like that, and you did not. You stood firm. You analyzed what went right, what went wrong. You adjusted your strategies, and you were very tough mentally, which is that's why you're one of the best traders I know, and I'm very proud of you, Tom. Very, very what a great success.
It's one of those things. So it's one of those things that you think about, but until you really experience, you can model things all you want, but until you really experience something, well, now you got a little idea. You make some tweaks, you improve your plan, and then you keep moving forward. But what you don't do is what many people did is just throw it in the garbage and I'm never going to do this again. Same thing with, I still like strangle trades, still one of my favorite trades out there. I love strangles, love the 112 trade. We just tweaked it a bit. But strangle, I did some strangles in gold and I lost 3 in a row, so I'll never do that again. But yet, it was my most profitable trade last year. Was gold strangles was the number 3 most profitable trade, or close to it, 4 most profitable trade. But yet, a ton of people gave up on it. We had a March drawdown month where we lost probably 3 in a row, something like that, gold strangles.
Yeah.
Half the people just quit doing them. But since then, I mean, it ended up being one of my most profitable trades by far. It was the best strangle underlying that I had traded. It's not quite a great one right now because it's just moving up. But, so the key to trading, or one of the keys, is consistency. Yeah. And you just got to keep keep your size. So you trade small, trade often. So you keep your size there, and you got to be consistent and let the probabilities play out. If you as an option premium seller, you got to stick to your plan, and you can improve it, but you can't just throw it out and, I'm never doing that again.
Definitely.
And the second one is you just got to learn and put in the time to figure out what's going to, how to get better each year.
So what was the few things that you learned and you changed from your trading after August?
I think it was and you are the one that I probably credit the most on this thing, but it's reducing the quantity of naked puts. So it's not the trade itself. It's just that I had too much. It wasn't oversized. Each trade was not sized too much. If you're going to have a campaign style trade,
Right.
where you're putting this on over and over. You're layering on, and obviously you've got more risk when you do
Right.
that versus individual discretionary trades. But to me, I've reduced the quantity, not the size of how much I'm generating. And what I did was I really moved away. So when I started the whole 112 type thing, it came
Yep.
from, a kind of a unique trade that we had seen somewhere else, and we created this bear trap style trade in SPX.
Right.
That's where we
Right.
came up with it. Then we went to like a 111, then a 112. Well, in 2022 was my best year trading.
Yep.
80% year. It was a fantastic year because we kept hitting these traps over and over and over and over, and we were making money because
Right.
the market just slowly was
Yep.
grinding
Yep.
down.
Slow
It's a
grind.
beautiful thing.
Yep.
Well, we were doing 60 DTE. Well, when I looked at 120 DTE, I could get further away. I could get a little more credit. I could get a lower Vega on the trade, and I would use less buying power to put these on. Great idea, right? So if you go to 120 days, it's a better trade setup, and it was doing really, really well. The problem is that when you go to 120 days, well, if you're doing it every 2 weeks on a 60 DTE trade, you're going to have 4 on. If you're doing
Right.
120 days, you're going to have 8 on. Okay. Now some come off, but you may have 6 at any given time.
Yep.
Well, the quantity went up. And
Yep.
we did have some hedges, but I had some other trades, which the other trades were more the problem than the 112, though.
Right.
Standard 112 was not my biggest problem on that August vol. Again, it was adding these XL 112 trades as an experiment that really was, I didn't have those hedged as well as I should have. Anyway, so I've gone back to selling closer to like 60 DTE naked puts, but I'm still leaving the put debit spread at 150 days.
Oh.
So it's a calendarized 112. And essentially so I'm back to 60 days on all of my naked puts like I used to do.
Yep.
2021, 2022, 2020, all those. But so those come off quicker. I have less stacked on. I usually only have 3 at a time. I've got 2 at like 90, 80 some percent right now, so they'll come off. But the put debit spread, I'm leaving those on at like 150 days. So those, even though the naked puts come off, all of those put debit spreads are still in there, acting as a bit of a hedge and still going to pay off if we drift down.
And they're 50
what I
wide.
did was a reduced quantity.
They're still 50 wide, those put debit spreads?
I actually went to 100.
100.
So I went to 100 wide on those, paying for them with a 60 DTE.
And how much are you paying for those spreads? Maybe $20, $25?
I'll tell you right now. And I dropped the delta a bit on those as well. So it's a little different delta trade. But for the most part, I'm only still paying about $8 to $10.
$8 to $10.
Yeah.
For 100 wide.
For 100 wide. The delta's a little lower than it was.
Yeah.
It's not like a 25 delta anymore. It's more like a 20-ish or something like that.
Okay.
So I kept the cost of the put debit spread about the same. And I really kept the cost of the naked puts, or I should say the income from naked puts, about the same. So the overall trade's still there, and I'm still making the money on the naked puts. But
so what's the total credit for the when you set it up the first time? So you pay 8, and then you sell 2 puts for how much?
So my size right now is I'm selling 2 put debit spreads at 8, and I'm buying 2 put debit spreads at 8, and I'm selling 4 naked puts around 16-ish.
16-ish. So you still get like an $8 credit or something. No, more.
No, it's like 24.
32. So you got about $20, right? Yeah.
Yep. So $20. So you make around $4,000, $3,500 a month at 90%. I take them off at 90%. So like $3,500 a month or something per trade.
Yes.
And I've added. So number one, I reduced size. I reduced the number of naked puts. And that's been good. I did, and I have a SPY leap trade that I do. So I've been just keeping that going. So there's still these 112s. There's some SPY leaps. I love selling SPY leaps. Been doing that for a long time. Then I added some more, I just added some more volatility type hedges where you're just buying more puts than you're and selling a few less calls at a higher delta to pay for those. And as those calls drop off or roll off or what have you,
Right.
I created a little bit more of a put wall in there, or just I have a lot more long puts than short puts. That's
Well, that's good.
there, so that if volatility does spike, those things pay off well because
Right.
it's quantity. So now I'm using the quantity thing the other way. So I'm buying a lot more out of the money, cheaper long puts, financing those with less quantity short puts.
Right.
And that's been holding the account up pretty well. I can't complain, and it's been a good move. Just took a couple months to get everything back into gear a bit, but I did not close everything, so I only closed about half of the trades on that vol spike. So I still had a lot of stuff there going. So that was a big thing. It was just
that was positive, right?
Yeah.
Keeping those
Have more volatility hedges as opposed to standard delta hedges. So I've got a little bit of both now.
Wow, that's amazing. That's amazing. It's really, really incredible, Tom. That recovery is amazing. Even though we trade at the same, we trade so different. Last year, I had a great year. I had 15.8, so let's say 16% return. I averaged 1.3% return every month, but I only used about at the lowest point maybe 8% of my capital, and the highest point maybe 22% of my capital. So I trade very, 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 very small, I think. And but I was never down. Volmageddon, the only thing that happened to me in Volmageddon, that I lost all my profits for the year for maybe a couple of hours, and then I was a couple of days later I was back to normal. But you know I need I need to learn. You make in 2 months what I make in a whole year. I mean, it's crazy. It's crazy. In January, I
ended
started
the year down. I ended the year down 11%. So
11%.
but
Yeah.
on a year that went up 22%. So it's not a victory, but I actually don't feel
No, I
too
think
bad
it is a
considering
victory. It is a huge
the
victory.
setback you had. And I feel that, you know what? Yeah, I paid a small fee, which we'll earn back. But being down the whole from the beginning of the year to the end was down like 11%, and I feel that's a good tuition to pay.
Oh my gosh.
It was like maybe I was down, I think $20,000 or something at the end of the year, 22,000 at the end of the year, which on a $400,000 account. So the key to me is that was the cheapest tuition I've ever paid for a college for an education, anywhere. So if I would, and I subscribe to stuff out there all the time. I want to learn and see what people are doing and things. So I'd have no problem paying for education. Now, I wish the account was better, and I wish I knew now what I didn't know then. But you move forward. So I'm excited for this year and where we should go.
Believe it or not, I'm also trying to be more aggressive. So instead of getting my normal credit of $8, $9, $10, $11, now I'm trying to get $20, $25 credit, but keeping the same units. And instead of doing like my 1 unit size, I'm trying to do 2 units. So so I'm going the opposite way. I'm trying to be more aggressive, and but I still haven't done campaign training. I have to find a way to break that stigma in my mind. I'm still a opportunistic trader. So for example, today I did a couple of trades, but for the last 4 days I didn't do anything because we're just up, and up. So
And I'm doing more of that. I mean, so I'm doing more spec type trades. So I reduced the campaign sizing a bit, but I replaced it with these SPY leaps. So the overall amount I'm using for technically both of those are campaign trades. The 112s and the SPY leaps are campaign. I'll tell you what, the one thing that's I've really been loving lately in the last couple of months has
Yeah.
been, well, either using a Jade Lizard or using I call the 112 and the Jade Lizard are the exact same trade for the most part. They're the same. They look exactly the same. There's a tail at the top and a trap. There's just, instead of a put debit spread, you have a call credit spread and a naked put. So either way, it's a similar style trade. But lately I've been putting on kind of a 111 version of this, which is like a Jade Lizard, but I've been using put debit spreads instead of the call spreads. But I've been putting the debit spread right at the money. So so I'm calling it like a 112, an at the money 112 or an at the money 111. It's like a Jade Lizard. So because I think the market it's a little toppy, a little frothy here. And if the market just kind of stays where it is or even drifts a little bit lower, we're in the trap right away. So we're capturing the trap. I've been doing this on bonds. I've been doing this in ZB. I've been doing it on ES. I have a bunch of them on ES. I've got one on gold. I've got some on oil futures. So that's been a good trade because we've been just kind of
the long put
drifting.
is at the money. The top
put debit spreads at the money. The naked put is still out at my 7-8 delta, something like that.
Right. And the short part of the put debit spread is at the money or the long.
Yeah, pretty much right at the money.
The short
could be a little bit, out of the money as well. I could start it in the trap as opposed to the 112. You're typically starting out of the trap up here somewhere, and you just want to. You're shooting for the tail. Well, with these, I'm shooting like a Jade Lizard. I want to be in the trap, like a strangle almost.
Right.
I just want to eliminate my risk to the upside in case this market does decide to keep, and it has been, continuing to grow. You don't have any risk to the upside. I've also been doing a little bit of an inverse Jade Lizard on certain things where I'm actually just reversing it. So I'll sell the call, a naked call, and I'll sell a put credit spread. So I have no risk to the downside, stuff like oil.
Right.
That's been just negative and dropping and so forth. So it really depends on your outlook for the underlying. But I am adding a lot more discretionary trades too, as well.
Yeah, I am like 100% discretionary trade, and it's funny. So that's the main difference between you and I. I'm 100% discretionary. You're more campaign with a little discretionary and trying to become more discretionary, and I'm trying to become more campaign and less discretionary. So I think we have to learn from each other. But wow, that 7% return in January. How much capital were you using to get that 7%?
Still the same account, still the 50%? Same 200 or 395,000 what ended the year at. So
the capital usage 50% around there.
Yeah, my capital usage is still hovering right around 55%.
Yeah. I think that's the main difference that I have to increase because right now my capital usage is 8%. That's ridiculous.
Yeah,
that's ridiculous. And
but there's a difference too with a trading account versus maybe an investing account.
So this is my trading. This is just my trading account. My investing account, I have it all in treasury.
I'm gonna use the whole dog. Well, I'm gonna use the whole thing, but I'm gonna use a good chunk of it. I want my 50% in there. It's trading. It's not my. Yes, I didn't love losing a chunk, but I gained most of it back. I'm back to where I started the beginning of the year, so I felt pretty good. That I'm off on my all-time highs, but I'm back to where I started the year. But it's a trading account. It wasn't my my long-term investments or anything like that. Those continue to do well, and
I think I have to change my mindset because I'm treating my trading account as it was part of my investing account, and it's not.
Right.
That's money I should just risk it to get the biscuit. I have to.
It's the goal. Yeah, that's the goal of the trading account, and so I'm gonna use it. Now, if you're gonna, and if you can't, if you're, not you, but if anybody's too afraid of losing it, I mean, okay, I went down 40% or something, and then I'm back up 40%, and then I'm up 80%, and then I'm down a little bit, and then I'm up. But overall, I'm still up 300-400% in like 5 years. But that money was this big when I started, and I'm not really adding much to it. It's just my
Right.
trading account. So I'm going to use it. And if you're afraid to lose that trading account, then just move the money to your investing account,
And trade smaller. Yeah.
and
Yeah.
then use your 50% on half the amount. So whatever you want to do, but people should, they got to be smart. You don't put your entire life savings into trading, but I'm glad to grow that trading account. I'd like to grow it bigger than my investing account. Then I'll take money out, put it in the investing account, and I'll knock the value down, and I'll start over again.
You won't believe which was my best trade of last year. The same best trade as the previous year.
Yeah.
It's the 1-2-0 to the upside with calls.
Yep.
With calls, if you can believe that.
Yeah, you had talked about that quite a bit, and that thing you don't want to risk money, but that thing makes me so nervous, and I can't do it. So that thing makes me nervous.
I do Tony +3. Well, you do strangle, so it's pretty much a strangle.
Yeah, I
It is
guess
kind of a
because I do
strangle.
have naked calls on my strangles. So
Yeah, I buy, whatever the long call is, like $90 on SPX, and then I sell 2 of the whatever calls make me $10-12 credit, and I take it off when it's a credit again. So, and last year, I it was incredible.
yeah,
I think
fantastic. Good.
I did 21 of those trades, and they're all winners, which is crazy, right? It seems like it can't work, right? But when it's
No, it's a
scary,
great trade.
when the market goes past your short strike, that's when it's scary a little bit.
Right.
But I don't know if you thought about this. In order for you to have the index or the stock end up at the trap, I think the product has to go past your short strike and then come back in. I have never had the product go into the trap little by little and stay there. Every time I've hit the
You're
trap,
talking the far out of the money, the far strike.
yeah, either on the calls or on the puts, or because my traps are more like triangles, because I do 1-2-0s a lot, right? So for me to hit that trap, which is like a TP more than a trap, the only times I've really been able to hit it is when the product goes past, you start losing money, you start getting scared, and then it ends up being okay.
All right. Well, for me, the naked puts that I'm using, I don't get close to those. Now I will go past the short puts of the put debit spread to get into the trap, but I probably never get more than a third of the way into the trap at best. And with the market just continuing to just drift higher and higher and higher, it just never gets in there. At least hasn't gotten in there in a while. Now, maybe 2025 is going to be the year where we start hitting more traps. And because we didn't really hit many at all last year.
So when the product is, getting to your short strike of your put debit spread, what is your mindset? Are you hoping that it goes past it, or
yes?
What? Yes.
Because it's a put debit spread. So you want it to go past your short strike, right? Because it's a put debit spread. So you want it to go, you want it going down. Okay?
But if you
want me on that wall, you need me on. I want that thing going down. What I don't want is I don't want it getting close to my naked puts that are, way out of the money. That's what I don't want. But I want it to go down. I want it to get past those long and shorts, because as a put debit spread, that's where it starts to make you money. So it loses money when it's outside of that. It only makes money when it drops. So you want it dropping. What you don't want it to do is drop fast.
Yeah.
Just slow grind. Give me a slow grind down market, and I will make a boatload this year. So
yeah, I'm sure. Wow.
Hopefully, but if it's a fast drop, and you can have a fast drop, and we had all it takes is a tweet, from the White House nowadays to move the market. I mean, we are having a nice up day today, and then we dropped, I don't know, 40 points in a few minutes.
Yep.
Today, when just because some news comes out. So that I don't love. I would just prefer we just grind away up, preferably down, but that's okay.
Let me share with you another trade that it's been working for me, and might sound a little crazy for a conservative guy. So let's say the market goes down. Let's say we're at 6,000. The market goes down to 5,900. Okay, I would sell the 5850 straddle.
Okay.
Both the call and the puts just below that. And then when we rally back up, let's say we went from 6,000 to 6,100, I would sell the 6,150 straddle.
Another straddle.
And that money, that trade prints theta, but like crazy. Prints theta. And it becomes a huge little bubble because you have 2 in the monies and 2 out of the money, options.
So what's your trigger for selling the first straddle when it goes down to?
Well, if VIX is above 18, 19, I want to do it. Above 18, 19,
right.
20.
So if we're seeing elevated volatility on a move lower, that's when you want to get in and you want to do your straddle.
And even if we crash, I'm getting so much money for the straddle that maybe I'm collecting. I mean, we can take a look at one right now, for example. If let's say April. Let's pretend.
Are you doing this on SPY, SPX?
On SPX.
I'm going to just look at it on my screen as well.
So let's pretend we're down, and VIX is, what's the VIX right now?
16.
It's not there yet.
Yeah.
But for example, I would say I would do the.
And how many days out are you going?
I would say above 60 days.
Okay.
So for example, I'm looking at the 5850 puts that has like 70. Let me see if I can share the screen. And let me see. I think that's going to be. Let's see if I remember how to share screens. Oh goodness, Tasty Trade. Where are you, Tasty Trade? I know it sounds scary, but since you are a person that likes strangles, this is like a strangle.
Is this an at the money, or I mean, obviously, right now you're doing out of the money, but
yeah, I would always do it out of the money.
Okay.
Good. Okay, let me see. Are you seeing it?
Yes. Yep.
Okay. So let's say I would sell 5850 put and the 5850 call. That gives me an extrinsic.
Are you selling that call?
Yeah, sorry. Oh shit. Selling.
There you go. Yep.
There we go. So this is how my sick mind works. Okay. So I'm selling this for 370. So that means I have a $370 cushion to the downside.
Yeah.
Because if we're crashing down, people are scared. Oh my God, what if it goes to zero? Okay. So I'm already there at 5,500, right?
Right.
Almost.
Yep.
So my break even on the downside is around 5,500. And if we go up, I'm getting around like $180 cushion on the upside, which would take me to almost 6,200.
Right.
Yeah. So it's not that scary.
No, it's really not.
No. And then let's pretend the market bounced a lot, right? Let's pretend the market bounced a lot. And then I would try to sell, for example, something that had similar $70, $80. So I would probably try to sell this one.
The same expiration
Same expiration, 6,200. And of course, the credit that I would have. Well, let's pretend that I didn't make any profits. So here I have another six. So I have another 630. So I have $600 credit from 6,200. It can go up
right at the money. So if we moved up 100 points, you might put it on right at the money, which is at the money is paying around that 300. So
yeah, no, I like to do it always a little bit like out of the money. So let's say we can do it at 6,150 if you want. Or
okay, but yeah, so you got that nice big trap.
So I have $600, right, from both sides.
Right.
So the market can go to $6,700 and to $5,200. So I think
but you have but you still have the old one on.
Yeah, I have both of them on.
So if it keeps going up, you'll lose on that one, though. At some point, as you go higher, that one's going to start to lose once it gets past $300 higher. But this other one will start to offset some of that.
Exactly.
Yeah.
So this sounds a little crazy, but look at the theta. The theta.
I do something extremely similar.
Oh my God!
My partner in Income Navigator, Igor, does it as well. But we do something very, very similar with a butterfly. So it's an SPX butterfly. We start it out of the money. And then if SPX moves X amount to the upside, we'll put another butterfly on there. So it's the same type of a setup, except we're using a butterfly. You're just using a straddle. I like the straddle idea. It uses a lot more buying power than the butterfly does, but it's the same type of concept because they're the same tent-shaped trade. A butterfly and the straddle, same exact trade. So I like this. We call it like a tiered butterfly. We do it a lot on RUT, but we'll do it on SPX as well. Yeah, it's just a tiered butterfly where we'll start out of the money to the downside. And if we start to shift higher, we'll put another one on higher. And then if it keeps going a little bit higher, we'll put another one on higher. So we'll go like 3 tranches. And the tent, if it's long, and then if there's any reversion to the mean, which typically will happen on it, you just want to land somewhere in the tent, take it off at a nice 10%, 15% winner or something like that.
Here I'm trying to make around $9,000 to $10,000 on each one of these trades. Okay. And if we crash down, there's no problems because I have $300 to the downside, and I'm not worried owning the S&P yet or rolling my puts from 5,500. If we go up, then I'll do the upside straddle to protect the first one.
Sure.
So
yeah, makes sense. We do something similar just with butterflies instead because it's a little lower buying power. But if you're making $10,000 on this, it's a $30,000 buying power. That's a 30% return on the trade.
But it's very risky, of course. It has 2 puts and 2 calls.
Yeah. It's everything's risky though, but so it's not terrible. You're protecting your downside, and I like you've got the VIX piece in there so that if we are dropping, you're protecting more downside. You're getting a good IVR on this thing, so you're getting good volatility. You're getting a good premium. Right now you're taking in $370 on this trade with a 16 VIX. If this thing goes to 20. You might be taking in $400 or $500.
400, like 420, something like that. Yep.
I like the trade. I think it's a good idea. I really, we do it a lot again on butterflies, but I like the straddle concept on it. So not it's just a big BP thing. So you got to have a good size account to do it.
It is,
or you got to get on the SPY or something. But
the maximum is I have two on at a time, and the way I came up with this trade is, I don't know, a couple of years back I had this 120 on the call side that went past it, and I had to keep one of those calls in the money, because the 120 call, I took the $100 credit on my long call vertical, and then I had to keep, and in order for me to keep protecting that call, I started selling puts against it at the money. So I had this naked in the money call, and the only way to keep protecting it to me was start selling puts at the money, every month. And then when the market went a little bit my way, just started printing money, So that's how, it wasn't a trade that I thought of doing it, but I just, by protecting another trade, I realized that could be a good trade.
I think the best trades that people come up with are accidents or adjustments, and then you think, oh, wow, that's
That's
pretty
not bad.
cool.
It is.
That looks pretty interesting. So yeah, I like the trade. I think it's a great idea. I like, if we're selling off, I think it's a great protection a bit to the downside.
Yep.
Unless you really think something major is going on, but I think if just a nice protection to the downside, because you're putting these on out of the money to the downside, so you've got good downside protection. If we reverse, sure, just I would go 1 to 2 tiers higher. Now, obviously, 2 more tiers you'd be chewing up $90,000 in buying power, so it's a big chunk of change for people. But you've also got a really big tent to try to hit, and getting your 9 or 10% out of that, or your 20%, 30%. I mean, if you even shot for 15% on these, you might be able to take them off fairly quickly. So,
yeah, because if you have a $600 credit and you make 100 out of the 600, it's a lot.
Right. Yeah.
Right.
Yeah. No. Good. I like it.
It's a little. That's my reckless side.
There you go.
I
like it.
That's my reckless trade. So I wanted to share it. So, and
that's
so
just another day trading for me right there. But but no, I really am a chicken for the most part. Everybody, oh, you're risking. I'm not. I'm putting hedges on. I'm kind of watching my size. I do whatever, and but it's a trading account, so I'm willing to try and do some different things to be more effective. I just kind of made that at the money 111 trade, to take advantage of what I was seeing in the market. You know what if we just take the put debit spread and we push it higher towards the at the money strike? You're going to take in less credit, but you got a big trap. And if we're drifting lower, fine. There's no risk to the upside, kind of like a Jade Lizard type of a thing. Okay, great. So it's a strangle with no risk to the upside. And sometimes a strangle is better, and sometimes that's a better trade. It just depends on what you see in the market. I'll tell you, something else I've been doing too is I've been doing these a long time in my investment account. So I do like poor man's covered calls in my investing account. So instead of buying SPX and QQQ, I do buy a lot of leaps. You can just do more
right
on it.
Right.
And if you want to write some covered calls in an investing account, I'm writing covered calls at like 15 delta, 20 delta, something out of the money. I don't really want to have to close my leaps or any of those things, but I don't mind. But when things rocket up and everybody freaks out when their covered calls go in the money. And to me, I don't really care, because all I cared about was the extrinsic value that I sold them for to begin with. If they go in the money, the leaps I own moved higher by roughly the same amount. So I'm still netting that extrinsic value. Make sense?
Of course.
So yeah. I'm in it for the extrinsic. So on the trading side, I took a little bit more to just doing something similar where I'm buying the leap again, and I go 180, 365 days, whatever. But I'm selling at the money, maybe even sometimes slightly in the money covered calls. And, you lose on the call if the underlying is going up, but you still get all of the extrinsic premium out of it, and the amount of extrinsic or intrinsic that you lost, you made up for it with the leap moving higher. So over time, you're just adding extrinsic weekly.
Yeah.
But so it's a nice little trade. I only like high quality names. So I've got a couple trades. I've got one on SPY, I've got one on NVIDIA, and one on IBIT, which is the Bitcoin ETF. Because I think they all drift higher.
They do.
Over time. And I'm not looking for appreciation. That's investing. That's my long-term investing account. I want the capital appreciation. In the trading account, all I want is extrinsic premium. So I'm just selling at the money calls. Sometimes in the money. Yesterday, I went in the money 10 points or 5 points on SPY and sold in the money covered calls, which gives me a hedge if we drop, which we're dropping today.
We are.
And I'm still gonna get all the premium. So I've been doing those a little bit more in the trading account too, just to give a little bit of differentiation on some of these spec trades.
So now help Tony. Forget about making 7% in a month. Help me take it to 3% in a month. How much theta should I have for every $100,000?
So I'm having a hard time getting my theta numbers up because of the way the trading, but I'm still shooting for, as from a percentage standpoint, on my theta, I'm still shooting for it around 0.2%.
Okay.
So that's kind of my goal. I think my previous goal was probably closer to 0.4%, but the Vega risk got a little bit higher. But I'm having a hard time hitting that now with the way I'm trading. So 0.2% is kind of where I am now. So if you've got a $100,000 account, obviously that's 200. So you're shooting for 200 theta.
Your $400,000 account, what's the theta right now? 800, kind of?
786.
786. And the delta, maybe 500?
It's actually right now at 900. Don't tell anybody.
900. Okay.
Because I have a lot of long trades in there right now, which I don't normally have. I'm not this directional, but I've added some trades on NVIDIA and Tesla, Amazon, Uber. Some of those I have been buying a few longer calls now, just to take advantage of some of these trades. And there's a couple they're all spec trades in there. So that's increased the delta and actually kind of reduced my theta because I'm long some calls. But normally, I'm pretty much always at 0.2% on my theta. It's almost always that way. Delta is usually half of that, usually. So my theta is twice my delta.
Now it's a little bit.
Usually, right now it's almost 1-to-1, which is temporary.
So your delta should be 450 and your theta should be 800, let's say.
Ideally, I like to be delta neutral.
Yeah.
And Tom Sosnoff has that was his 4 years ago. He and I had a conversation about it, and that's what he told me. And you know what? It's stuck with me. He actually told me 0.2% theta, 0.4% max on your. I'm sorry, 0.4 on theta and 0.2 on delta, and I've really used that pretty good for years. I've usually stuck within that. I'm a little lower on both of those right now, but that's really where I am.
No, that's great. I mean, in order to hit those numbers that you're getting, you have to have, a lot more theta and get a little lucky on direction, right?
Oh, well, not normally, because again, normally my delta is 0.1%. I'm almost neutral. So I don't care if the market goes up or goes down. It really doesn't matter to me. In fact, like I said, if the market goes down, I make more money.
Definitely.
Right now, I'm longer a couple trades than normal. But even on oil, and bonds and those types of things, I'm pretty delta neutral on those trades right now. My my delta on all my oil trades, I've got $40,000 worth of buying power in CL and oil, and my delta is maybe 25, and my theta is 120.
Wow.
But because I like strangles so much, so strangles are just such a delta neutral trade that's heavy theta, and I like strangles.
I was normally I try to watch smart people. I don't know if you watched Ray Dalio's most recent interview. He said a couple of things that scared the shit out of me, and
I try to avoid the news.
So no, but he was trying to analyze the indebtedness of the United States. The economy is around 29 trillion. We owe 35 trillion. We bring in 5 trillion. We spend 8 trillion. So every year we're having to borrow 3 trillion to cover the credit card debt. And then now we're spending 1 trillion on interest, 1 trillion on defense, 1 trillion on social programs.
Mm-hmm.
So he was explaining all how are we going to get out of this. So that's scary. But he said something else that scared me even more. So for the last 30 years, let's say the S&P has returned about 8%. And according to his inflation estimates, he thinks that inflation has really gone up, real inflation, 10%. So that means if you're in stocks, you actually are losing 2% a year. And he said that if you're in real estate, normally real estate goes up around 6% a year. So people in real estate are actually losing 4% a year in true buying power. And if you're in stocks, even though you think you made 8%, you were actually lost 2% in buying power. So that really scared me. That means we really have to try to hit higher and higher returns to protect ourselves from inflation. And like the ad on TV says, wait, there's more. So what happens if you buy something for 1 and it goes to 2? The government takes 40% out of that from taxes. So that's even worse. So even if you're able to get the 10%, so what he was saying is that we have to try to get 10% return on investments tax-free after tax.
Yeah, to tread water.
Just to tread water.
Right. I don't necessarily disagree with that, which is why I think it's so important that I think people need to trade their own, I think they need to make their own moves and educate themselves on the investing front and then maybe even the trading front. If you don't trade, don't trade. If you're too nervous, don't trade. But you can't settle for 6, 7, 8, 10% returns. You really can't. You really need, but you don't have to try for 20 and 30%. It drives me crazy to see all of these people saying how much they can. The wheel strategy, I make 10% a month or 20% a month. Yeah, you can in certain times to do that, but try doing that over 20 years. Good luck. I don't know anybody who's been doing it 20 years.
No.
So I'm sure somebody will comment and said, yeah, I've been doing it for 40 years and I'm great at it. But I think it's really hard to do. And I think I think you take a lot of risk because you can't be trading SPY to do that. You've got to be trading Palantir or something like that. And well, it's great. I mean, everybody's going to take credit for being in Palantir, going from 20 to 120 bucks this year. But at some point, it may go back to 50. So if you got in at 70, 80, 90, well, you can wheel all you want. But when your underlying goes down 30%, like Apple went down 30% 2 years ago. And when nobody's really talking about what the underlying asset is doing. So that all being said, I think you have to shoot for, I think 18% is kind of my goal in my investing accounts, like 1.5% a month, which I don't think is crazy.
But that's what I shoot for myself.
You're 1.5% in your investing account. Try to get to 18. If you can get to it, great. If you fall a little bit short, fine, but you're not taking so much risk on. I mean, I'm not doing 112s in an investing account. I'm doing it in a trading account.
Right.
My investing account is actually up 8% as of yesterday for the year.
Oh my God, that's incredible.
But I'm not doing crazy stuff. Unless you think leaps versus owning the stock is crazy. But the only stocks I only have Amazon, Google, Nvidia, 3 stocks. That's all I have. But 80% of everything is in QQQ and SPY and TLT. So, and I can write some covered calls, but I just more trade leaps. I think you can still do that conservative somewhat. And if you think that the market's going down, sell some covered calls. If it's going up, don't, or sell them way out of the money. Either way.
Right.
But then I think you also have that trading account, which depending on your age and who you are, keep putting money into that investing account. But of maybe all of your wealth, maybe it's 70% in investing, long-term, hold, appreciation, real estate, whatever. But 30% should maybe be in a trading account that you're trying to generate maybe 2%.
Right.
Not 10% a month or 8 or 5. I mean, if you hit it, great. But I mean, if I get lucky and I beat 3% a month, yeah. But I just want 30% of my assets in a trading account type of a thing so that I can continue to try to do what you're saying, which is, beat what the market's doing while and outpace inflation and things like that. So I think you just got to be smart, and I agree. But that's what the trading account is for. It's for taking risk to offset inflation and some of those things. And if the things come true that some of these guys, do I believe there's a credit crisis on the horizon? Yeah, but it's been there for years. But I still, do I think the U.S. is going to default on debt? Well, probably not. But I think the debt ceiling raising and all of this, to me, that stuff makes me nervous. That a big credit crisis could be looming, credit card debt, whatever.
Yeah. The U.S. is never going to default because they can print the money.
Right.
But we are suffering the crash. The crash is the inflation. The punishment is inflation for everyone. And that's what people are not realizing. So we can keep, printing money, deficits, but all that money that gets printed, those $3 trillion, at the end of the day, they end up in assets, and they just raise the value of the assets, but they raise it artificially and with unrealized capital gains, which is the worst. In most countries, you can update your cost of any asset, your home, your stocks, with inflation, not in the US. So here, the government is creating inflation by printing money, but then they take 40% out of that gain via taxes. So you're gonna still be left behind if you cannot make that 15% return a year.
Yeah. So I think you got to learn a skill to be able to do that, and you got to. I think on the investing side, you really have to and even on the trading side, you've got to leverage the power of compounding.
Yeah.
You just have to. You got to try not to, take that money out unless you absolutely have to, and you have to. I'm a big believer that you have to live beneath your means.
Of course.
You should enjoy life and you should do whatever. But when you're younger and what have you, and I know you want to go and travel, and my kids do too, and so do I. And I don't feel like I'm that old, but still want to do some fun things too. So I travel, do a lot of those things, but I'm plowing 30 to 40%. I'm probably close to 50% of all of any income that I bring in goes into my investing. Or, not my trading account right now, but my investing account. I'm just jamming every dollar I can in there. And I don't even have a car. So my wife has a car. My daughter has a car. I don't even own a car. So if I have to go somewhere, okay, I'm taking the one car my wife and I share because I work from home.
Right.
Not because I'm cheap or any of those things. I just don't need a car. And instead of having a $500 a month expense, I'd rather take that $500 keep plowing it into trading
Sure.
and investing accounts and making money.
Definitely.
Yeah.
So
I believe people shouldn't really be buying houses. They should probably be renting until they absolutely need to buy a house. I mean, as opposed, the interest rates you're paying are way more than the house is worth. You've got, maintenance issues, replacing the water heater, replacing the roof, mowing the
insurance.
grass, buying a lawnmower every couple of years, or having lawn work done, and septic tank blows up, hot water tank blows up. Who knows what happens, but if you can rent as long as you can until you have a family or something, and then having that house and a yard and all of that is great. But just take as much money as you can and stop driving expensive cars, people.
200%.
Unless you have the money to do it.
Last year, all my neighbors said, "Oh my God, Tony, you bought 2 cars." But the last time I bought a car was 17 years ago. So
I'll try to pay cash if I can, as opposed to taking a loan out. But
yeah, of course. Tom, this was a great conversation. I hope 2025 we can do it more often.
Yeah.
And to end up, let's say 2025 is a great successful year. What does success mean to you on your trading account and your investing account this for 2025?
Well, again, I'll reiterate. For me, it's looking at 1.5% in investing account. So 18% this year would be fantastic. In my trading account, I'm trying for 2 to 3%. So anything in the 25-30% range this year would be great. I'm not going to look for doubles and triples in a year. If it happens, it happens. But I like that. How about you?
Well, I'm trying to go from 1.2, 1.3% a month to 1.8% a month. I know it sounds crazy. I want to make 0.5% more a month, which for me is a lot for my stomach. So I want to, instead of making 15, 16%, I want to try to make 18 to 21%. And in my investing account, I'm actually happy with 6%. Because it's a very big account.
Yeah.
And I'm just trying.
The bigger the account, the smaller the gains have to be.
Yeah. That account,
less risk.
I'm taking care of it. I'm just babying it. I don't want to risk it too much. So I'm a little bit more conservative. But I'm trying to learn from you, my risk teacher, because I consider myself a very good trader, and I think I'm wasting my trading ability by being so conservative a little bit.
I think so. It's your trading account. Get out there, have some fun, and you know stuff, and just get out and do it. And
if I blow it up, I blow it up. So it doesn't matter. Yeah.
To me, I'm fine. I'm not fine with it, but I'm okay losing a chunk because I'll get it back. It's all good.
Yeah, especially to the downside. They're always gonna bounce because of inflation, right?
And markets drift over time. Okay, if I was 97, it would be different, but I'm 57, so I got plenty of time to keep doing it. And I focus on having multiple income streams if I can, and other businesses and things like that. So, I feel pretty good with where I am, so I'm okay with taking a little bit of risk. And I still don't think 2 to 3% a month is taking massive risk.
No,
I see these people trying to do 10% and talking about doubling their money and doing these 10K to 100K challenges, things like, okay, if they can do it, great. I mean, I'm jealous because I couldn't do that in a million years.
I can do it.
But I'm okay just plodding along. You go down, then you go, just like the market.
Yep.
So.
And Tom, can you remind everyone if they want? I know you create a lot more content than I do. How can people find you on YouTube?
So
on Instagram?
You can catch me on YouTube. So I do have a YouTube channel. You can subscribe. I'm just sharing what I'm doing. It's Tom King Trades. So you can check that out. And if you want to, you can look at the Income Navigator service that we have. You can go to incomenavigator.com or the mrtoptick.com and sign up and see what we're doing in our trading service. Tons of education. The focus is on education, not following a bunch of. If you want just alerts, don't do it. If you want education and you want to just be a better trader, better investor, and be in a community of people that are like-minded, that want to learn and grow, then that's a great thing. Because trading can be lonely by
Very
yourself, but if you're in a group
Yeah,
where you can bounce ideas off of, and people can tell you, hey, that's crazy, or hey, try this, man, you might, so much stuff you can learn. So
definitely. So there you have it. If you want to grow your pile, follow Tom King in the Income Navigator. And remember, you got to risk it to get the biscuit, baby.
see you guys.
Give me a second.